Top three things in my notebook this morning. Number one, the VIX. Number two, the industrials, U.S. industrial stocks. And number three, the U.S. dollar. So first on the VIX, interesting to watch this obviously manifest. The S&P 500 actually has not been up for 4 days. That's the first time this year that that's happened. Again, first time is an interesting time to point out in the face of very asymmetric levels of volatility. Again, once you get to 10 in the VIX, don't forget that the VIX has really never held below 10, so that's why we call it asymmetry. But again, the VIX is now above our intermediate term trend line of 1194. Of course, yesterday it closed at 1328, so we're getting volatility back in the market in as much as anything else, which is probably a very good thing. Second point is industrials. They broke our trend line yesterday. So again, now the industrials are bearish trade and trend, joining the consumer stocks and or really anything that's early cycle consumer. So again, friendly reminder, the early cycle consumer stocks, whether they be discretionary consumer stocks or housing, continue to lead losers on the year to date. And now industrials are right behind them. The industrials are only up 1.1% now for the year to date after falling to down 2.2% for the month. So we're watching early cycle industrials very, very closely. And then finally, the dollar, which I've had wrong for basically the last month. The dollar is up. So again, that's called being wrong because we think it's going down, or at least I think it's going down. And in the face of it not going down, you have to consider why. So again, the Europeans have been very, very dovish on the margin. So I think a big part of this move has been that the euro has been going down alongside European equities. So there's a lot to deal with there. But again, as you go through the Fed meeting today and towards Jackson Hole, the propensity, I think, of the Fed to be dovish is going higher as the economic data continues to slow. Now, some people say, oh, well, look, Q2 GDP bounced. You know, hello. After the worst GDP number that we've had in a post-World War II expansion on a sequential basis, of course it bounced. And newsflash, it's the third quarter. And those are your top three things.